What is the number one thing that you need to be focused on for your deferred sales trust transaction? Part one. This is the video you're about to watch. Hi, I'm Brett Swartz, founder of Capital Gains Tax Solutions, where we help you defer capital gains tax using deferred sales trust on the sale of highly appreciated cryptocurrency, business, real estate, primary homes, save a failed 1031 exchange so you can create and preserve more wealth. And so each week, I'm helping individuals and families and also business professionals clarify if the deferred sales trust is a good fit one way or the other. And as we're going through this process, I have found that it's very important to break up into segments each part of the transaction, and as well break up into segments what you need to be focused on in that particular piece of the process. So oftentimes we're getting calls from individuals and it's 10 days to close, 15 days to close, 30 days to close, and it can be quite a bit of an overwhelm for folks who are learning about this for the first time. In fact, what I highly recommend everyone to do is to separate the transaction from the exit plan. And the exit plan being working with our team, learning about the deferred sales trust, understanding the legality, understanding the flow of the funds, understanding how this all works, and then sell your transaction. But sometimes we're in a crunch situation. Like yesterday, I got a call from an individual. She is selling 1,000 acres in Wyoming. It's been in the family for generations, and the process is overwhelming in the first place just to sell that much of land. And then second, about 14 days to close the transaction, she calls me, says, "Oh my gosh, I'm looking up ways to defer capital gains tax. I heard about a Delaware statutory trust. I know about 1031 exchanges, but then I came across the deferred sales trust. And so I'm trying to clarify what the differences are. It sounds really amazing, but I got to be honest, it's very overwhelming because my estate planning attorney hadn't heard of it, my CPA hadn't heard of it, and the commercial real estate brokers for our transaction hadn't heard of it. So I'm wanting to learn what's the number one thing I should be focused on right now. And the answer to that is timing, right? Timing and space and time to learn about the process and the procedures and if the deferred sales trust is a good fit. And so I'm going to share what I shared with her yesterday, and I'm hoping that it's going to give you some clarity on if the deferred sales trust is a good fit for you and what you should be focusing on right now if you're looking to close your transaction. So first thing to understand is she's selling a commercial real estate property, so there's a couple timing pieces that she can close. She could potentially close the deferred sales trust in 14 days if we were to get all the stars to align and help everyone understand what this is. The challenge with that or rushing that situation becomes it's kind of like a last minute, a deal. And with all the parties involved, it can be very stressful. Okay. So what I actually recommended to her, since she is eligible for 1031 exchange, is to first go to a qualified intermediary, close the transaction and take a deep breath. And for 45 days, she can review to see if the deferred sales trust is a really good fit for her. Also, in the meantime, I encouraged her to join our mastermind, which you're invited to as well. If you're watching this, it happens every Friday. It's open to everybody at 10 a.m. Pacific Standard Time at 1 p.m. Eastern Time, where you can learn about the deferred sales trust. You can ask questions. We have previous clients on there. We have strategic partners on there. We have real estate professionals, financial advisors. We have CPAs that join us. We have people that are just looking for the deferred sales trust for themselves. So I encourage her to jump into that classroom, spend a few weeks with us, as well get access to our due diligence portal where she can review and start to see the legality, which is going to come up on the second part of this video here on our series. But for this first one, it's just simply timing. How much time and energy do you have to spend to devote to understanding the deferred sales trust, and how quickly is your deal closing? And if you're not selling an investment real estate property, you say, well, Brett, I'm selling a business, or I'm looking to sell cryptocurrency or stock. Okay, well, we want to set up the trust. We need to set up the trust prior to the funds being transferred to you or being sold. So the key there would be try to slow everything down, right? Try to slow everything down. Now, have we closed deals in a week or 10 days or 15 days? Yes, but those are sometimes fire drills, and it can become very stressful. So what I highly encourage everyone to do is just to slow down and to take it all in, understand the deferred sales trust, what it is, what it's not, see if it's a good fit, and then from there, take the next step. And so a few other thoughts as well. You always want to to remember the why behind why you're selling in the first place, right? What is the problem that you're trying to solve? So the things to focus on is first is timing, if it's even eligible, right? Two is what am I trying to solve, and why am I selling in the first place? And so as you're working through those scenarios, a few things may come up. It may come up that I'm trying to solve capital gains tax for. Okay, I'm trying to free up my time and energy to take the funds to my next business venture, and I want to do that in a tax efficient way. It could be that you're a very high income earner and you're selling your business and you're going to be staying on for a few years, and you're saying, hey, I'm going to be making a lot of income, and I want to kind of delay some of that income tax as well. You might say, I have some estate tax challenges and I'm looking to move public stock, private stock, or whatever other asset you're selling, and all of those funds out in the equity outside of your taxable estate. It could be a number of things, but those are really, I guess I say, the one thing to focus on. But it's first the timing and eligibility, but then it's the why and the problem behind that. And that's what sets up everything else with the deferred sales trust, which we're going to be covering in the next videos. And if you're ready to learn right now and ready to jump in, or you have a live deal, you can go to capitalgainstaxsolutions.com and you can schedule a one-on-one consultation. Now, we have a minimum $1 million net proceeds, $1 million gain per transaction. So make sure that your minimum is there. If you have two deals at $500,000 each, you can also qualify. As well, just join our mastermind and start to learn about the deferred sales trust. You can also go to capitalgainstaxsolutions.com to register right now for that. Again, every Friday, 10 a.m. Pacific Standard Time. Hey, look for the next video. We're talking all things about studying the deferred sales trust, the legality behind it, and the goal of that is to give you 100% confidence in the structure, in the strategy. So look for that next video right now. Thanks so much for watching this video, and we'll talk to you on the next video. Bye now.